Hello to all traders and welcome back to another market review brought to you by Orbex. So the big highlight of this week is the Fed looking likely that they're going to pause at 5.5% on their next meeting, which is tomorrow. It's looking likely that they're going to see how the American economy is going to fare, especially with the non-farm payroll data coming this week as well, which is supposedly going to be a little bit less than last time around. So with this being said, with the Bank of England also pausing, with the European Central Bank also pausing, will that give the Fed a little bit more of an impetus to kind of calm down a little bit before it starts really pushing for another interest rate hike? Well, the rates are supposed to stay higher for longer. There's no immediate looking like it's going to come down anytime soon, especially with inflation just slightly creeping up around 4% since it dropped to 3% for the first time for over 2 years. So we'll wait and see what happens there. But in the meantime, let's look on gold and the dollar today, because the gold is progressively just flirting with the $2,000 area. It did peak above that last week on Friday, but now we're just seeing a little bit of a move to the downside before a slight pickup possibly before we get to the Fed and the non-farm payroll. So just as I said, flirting a little bit below the $2,000 area, but a very nice pickup since we had this break of this last swing high roughly around the 1946, 1950 level. We saw another $50 jump to the upside. So it's quite a progressive move, obviously, with the geopolitical tensions that are in the world at the moment. Gold is looking likely that it's going to stay higher for longer, but there is always a risk of a correction and a potential sell-off. So do be aware if you are trading gold at the moment. But at the moment, we are looking likely that we could actually see, if we look on the 4-hour chart, another slight pickup. We are seeing this bearish divergence on the RSI at the moment. So this could give us a slight correction, a corrective move to the downside. But all in all, it could actually have just a slight correction here before moving a little bit lower and then having another test at 2,000. If we do get above 2,000 and a confirmation, then price action could actually lead us towards the 2020 area, 2025. Obviously, as you can see, we did peak at roughly $2,010 at the back end of last week before this slight correction and sell-off. So are we going to revisit these areas and prices in the next few trading sessions? Lots of news coming in this week, like I said, the Fed and the non-farm payroll, so get ready for that, as it is expected to be a bit of a bumpy ride in the market. So let's just get right on to the dollar index. Let's look on the 1-day area here, and we did have this pickup in price action, but since then on the daily chart you can see this descending channel really moving into play after we were really overbought on the RSI. Not really any divergences to say where the next signal or swing is going to come, but if we look on the 4-hour chart, we're just seeing now that the dollar is picking up slightly. We've had the euro dollar currency pair as well bouncing off the 106 handle, which gives us the signal that we could have more of a stronger dollar in the next few trading sessions, but obviously fundamentals can really start hampering these moves. So at the moment, as I said, we're just looking at this kind of zigzag moving into another territory roughly about the mid 105 handle, trading just above 106 at the moment, so we could have another progressive move to the downside on the dollar index. But obviously, again, we'll just wait for the fundamentals to come out and see where the next move is going to be. So that's all for today. Let me know what you're trading on. As usual, this video will be posted on our Telegram and YouTube channel, so feel free to comment, like, subscribe, and we'll get back to you as soon as possible. So have a great trading day ahead, and until next time, bye for now.